Introduction to Insurance Business by Abbas Vadali, Assistant Professor, Amal College Nilamber. What to learn? In this unit we shall discuss about meaning of insurance, types of insurance, distinction between life and non-life insurance and important terms used in insurance business. This tutorial will be useful to the second semester BCom students for their financial accounting course and to the fourth semester BCom as well as BBA students for their banking and insurance course. Meaning of insurance. Under an insurance contract, one party, called the insurer, undertakes to indemnify the losses suffered by the other party, called the insured, for some specified causes in consideration for a fixed premium. The document that contains terms of insurance contract is called insurance policy. Types of insurance. Insurance is basically of two types, life insurance and general insurance. Life insurance policy covers the life risk of the insured up to the policy amount. Life insurance becomes payable on the death of the insured or on the maturity of the insurance policy. General insurance means insurance other than life insurance. Section 2, 6b, of Insurance Act 1938 defines general insurance business as fire, marine or miscellaneous insurance business whether carried on singly or in combination with one or more of them. Classification of life insurance. Life insurance policies can be broadly categorized into the following. Whole life policy where the insured amount is payable on death. Endowment policy where the insured amount is payable either on the lapse of specified period or death. Annuity contract where a specified amount is paid annually to the insured from the date on which he attains a specified age till death. Classification of general insurance. General insurance can be broadly classified into the following. Fire insurance. It covers the risk of loss of property, accidental or non-intentional fire. Marine insurance. Under this, the insurance company agrees to indemnify the owner of a ship or cargo against risks which are incidental to marine adventures such as sinking or burning of the ship, collision of the ship, etc. Miscellaneous insurance. These are insurance policies which cover various other types of risks. Miscellaneous insurance in India include motor vehicle insurance, burglary insurance, credit insurance, and so on. Distinction between life insurance and other forms of insurance. In life insurance contract, the insurer agrees to pay a fixed sum of money either on the death of insured or on the lapse of a specified number of years. Under marine insurance, the insurer undertakes to reimburse any loss or liability that may incur on the happening of an uncertain event. Since life insurance is payable on the happening of an event which is bound to occur, this form of insurance is often described as assurance business. Other forms of insurance provides only for the reimbursement of loss or liability incurred and therefore known as insurance business. See human life, being invaluable, may be insured for any amount depending upon the premium the insured is willing to pay. Other forms of insurance are contracts of indemnity and therefore the sum payable under insurance is limited to the amount loss actually suffered. Life insurance contracts are long-term contracts running over the number of years. General insurance contracts are only for 1 year though renewable year after year. Important terms. Premium. The payment made by the insured as consideration for the grant of insurance is known as premium. Claims. A claim occurs when a policy falls due for payment. In the case life insurance, it arises on the death or on maturity of the policy. In case of general insurance, a claim arises only when the loss or liability occurs. Surrender, where the holder of a life insurance policy wishes to realize the amount of policy before the expiry of the full period, he surrenders his right under the policy and in lieu thereof is paid an amount called surrender value. Bonus, a life insurance policy may be with profit or without profit. The holder of with-profit policy is entitled to receive, in addition to the sum assured, the amount of bonuses declared on each valuation. Paid-up policy. If an insured is unable to continue to paying premiums on his life policy, he may discontinue the payment and convert the policy into a paid-up policy. All policy conditions except the insured amount will remain unchanged. Reinsurance. If an insurer does not wish to bear the whole of risk of a policy, he may reinsure a part of risks with some other insurer. This is known as reinsurance. Thank you for watching.